What are 3 great stocks to consider buying in October 2020? That's exactly what I'll be covering right now in this video. So if you guys, can help me out a bit, hit that like button down below. It helps with the YouTube AI and I appreciate it. So thank you for that. Let's start here with a classic blue chip, stable, strong dividend history, and consistent return company, PepsiCo. Now I started buying Pepsi back in 2018 when it dipped near that $100 range because I found it providing good value back then when you consider the stability of the company and the dividend of nearly 4% that it offered. One of the biggest reasons to own Pepsi is for stable dividends, so let's take a look at the dividend yield right now. The current yield sits at 3%, which is respectable, but what's more impressive is the growth rate of 8.41% and the long history of raising this dividend for almost 50 consecutive years. Not many companies have done this, so it's a big achievement to say the least. Payout ratio is a bit high here, but it's still manageable with their strong balance sheet and cash flows, so I'm not really concerned here with that regard. Now looking at the dividend yield history, we can see Pepsi is showing some slight signs of being undervalued based on their historical yield, which is rare because this is such a stable company that rarely goes on sale. And what I like about Pepsi specifically compared to their competitors is that this company continues to innovate and continues making acquisitions of other innovative businesses to keep expanding their business and continue being market leaders in their space. In fact, there was some news around Pepsi recently which ties me in to our video sponsor. Now guys, how often do you wake up in the morning and you find yourself kind of scattering through different websites to figure out what relevant business news happened in the last day or so? This is usually what I would do and what my mornings looked like before I came across Morning Brew, which is today's video sponsor. Now Morning Brew is a completely free service, guys, and they provide you a newsletter from Monday to Saturday in your inbox waiting for you in the morning so you can read through news in a tabulated, well thought out form while sipping your coffee. This not only saves you time because it's all organized and presented in one single email, but it also keeps you well informed and educated with what's going on in the world around you so you can become a better investor. Recently, I found out that PepsiCo is releasing an enhanced water beverage called Driftwell to help you sleep better. And this is big because they're expanding into products to help with health and wellness, which could be a big winner and a new segment for them here long term. Now guys, I will leave a link in the description down below. It's going to be the first link down there. It's going to take you like 15 seconds to sign up. And I do highly recommend you check it out because like I said, it's free and it's going to make you a much more informed investor. Now I want to make this very clear. Pepsi is not a high growth company. So if you're looking for that, you might want to stick around for the other 2 picks. In fact, this year Pepsi will only see around a 1.2% growth and next year around a 5% growth. Nothing too crazy, but like I said, stability is the name of the game here. Now looking at the technical charts, I want to point out something that I noticed with Pepsi. On the weekly charts, it tends to respect the 100 moving average fairly often, and this is a strong level of support in the past and has proven to be a strong entry point for this company. Even if we break through this, guys, and there's a lot of selling that happens, the stock rarely sees a large correction, and currently we're down around 12% off the highs, which is a decent sized correction for this kind of stock. And in my opinion, it's enough of a discount for me personally to start nibbling away at some shares, and that's exactly what I did last week. Because of the type of business Pepsi is, the sector that they play in, the stability, like I mentioned 100 times already, of this company, it's rare to see this company drop significantly, and I don't think we're going to see prices under $100 per share probably ever again unless we see a stock split. This is the type of business that you want to keep a close eye on because when the broader market moves lower, it typically pulls Pepsi down with it, even though it's nothing to do with Pepsi and Pepsi is still performing well. So you use that as a buying opportunity to build your position or start a new position if you've missed out in the past. So now guys, if you're enjoying the video so far, consider hitting that subscribe button down below and hit that bell notification because I release videos at least 5 days a week, so you don't want to miss them. And with that bell notification, you'll be notified every time I release a new video. Now, Abbvie is another company that I love, and I was going to cover this in a recent video. My subscribers know which one I'm talking about. And if you guys want to see a dedicated video on Abbvie, I will make that happen. I kind of have a feeling you guys want to, so I'm going to put that down in the list of videos to do, but just let me know in the comments either way. Abbvie is a pharmaceutical company, and it's up there with names like Johnson & Johnson, Pfizer, and many other large names. Many investors focus on high growth companies these days, but a lot of value can be found through companies like Abbvie, which has a high probability of providing safe and consistent returns over the long term. Also, when it comes to high growth, don't rule out Abbvie, as we'll see in a few minutes here. Now again, similar to Pepsi, the big focus is dividends with this company, with a whopping 5.5% starting yield and a low payout ratio, making it very sustainable. Now while the history of raising the dividend is shown as 7 years, it's actually longer because they spun off from Abbott Laboratories, which has a long history of consistent dividends. The growth rate of Abbvie is a whopping 20% increase year over year, which is absolutely amazing. And while this may slow down in coming years, I have no doubt that Abbvie can maintain at least a stable 10% growth rate in their dividends for many years to come. So why Abbvie right now? Well, apart from their dividends, the stock itself is also showing some great value. It's down over 30% off its highs, has a very low forward PE of around 8, making it extremely undervalued at current prices. And it's exactly why those in my VIP membership group already know that I've been buying heavily into Abbvie recently. I initially bought some of the stock in the high 60s about a year ago, and it's been doing very well for me. And now that we're back in the $80 range, I do want to load up once again, increase my exposure to this industry, and have a more well-balanced portfolio with Abbvie kind of front and center representing this sector. I'm confident over the long term, Abbvie is going to be one of the best winners in my portfolio, not only for the dividends, but also for capital appreciation. I think the market is severely overlooking this stock, and I think the market will eventually come to terms, and this stock will see some good days in the future. Now, there is a reason why the stock is still sort of depressed from its highs, if you will. Abbvie was going through a merger with Allergan, which is another massive company, and that actually added a lot of risk and uncertainty for Abbvie as an investment. However, just a few months ago, Abbvie announced the completion of their acquisition of Allergan, so now they're one combined company under the Abbvie umbrella. This is good because it removes this big element of uncertainty around this company. So are you still not sold on Abbvie? You still think it's a boring company, you know? What can it really do? Yeah, sure, it's like another Pepsi, grows slowly over time, good dividends, blah, blah, blah. Hold your horses, let's take a look at their growth rate. The growth on this company is astronomical, considering its size already, guys. This year it's supposed to grow by 37% and next year by 17%. Of course, a lot of this is due to the acquisition, but they are a combined company now, so you gotta value it as a combined company. And since we're just paying the price right now, what Abbvie was trading well before the acquisition, you're essentially getting the Allergan company here for free with the current price of the stock. High dividend, high growth, stable, very undervalued in my opinion. What's not there to like about Abbvie? I think this is a great stock and is definitely in my list to buy more of in October. Alright, so now if you're still watching, I know I lost a few of you here, but if you are, let me know in the comment section down below. Say the word Fox so I know that you're a true viewer of mine. So we covered Alteryx in a dedicated video previously, so if you want to learn more about that company and what they do, I strongly recommend watching that video. This company caught my attention because if we look at the charts, we can see it's taken quite a significant slump since last earnings, and it has remained around this level ever since. We can see the last time we came down here and showed oversold levels was during the March crash, so this is quite a significant correction that the stock is seeing to date. But looking at this chart, guys, you'd think that the company is done, there's no more upside, and they're doing something wrong, the business is failing, all this kind of stuff. But the reality is quite the opposite. The current year, they're expected to grow a modest 11.5%. Not bad, double digits, but not bad. But the next year, they're expected to grow 27%. This is quite significant growth, and I believe the stock right now is possibly showing signs of being extremely oversold and undervalued, as it has gone out of favor with investors. Now, while this business particularly does not excite me all that much, it does play in sectors that I am excited about, like cloud, so I am considering kind of dabbling here a little bit in Alteryx at these prices. The company is profitable right now, but they are expected to lose money in the short term because of the global issue and it putting strain on their business. So I think that's a big reason why investors are fleeing the stock right now. They see opportunities elsewhere. But eventually, I do believe those investors will return back, and this will push this stock back up to where its highs were. Of course, because it is a high growth company, there's no dividends here, but you are getting the opportunity and the potential to possibly double or triple your investment over the next, say, 3 to 5 years or so. That's just my opinion. It may or may not happen, but from what I see right now, I think we're very suppressed on this stock and we're due for some sort of rebound to a more reasonable valuation. Now, if I had to make a prediction, I think we may probably hover around this level closer to next earnings, and as the earnings approaches, we'll probably start running up for those earnings report as hype starts building up. But I think either way, over the long term, Alteryx is a winner. I don't think the business is really going to suffer long term. And while they are struggling here short term with their financials, the growth speaks for itself, and it tells me that yes, they're not growing maybe as high as investors are expecting, but there is still growth, the business is still doing well, and as a result, I'm interested as an investor. I think at these current prices, there's probably more upside than downside in the stock. Sure, we could continue lower. That's just an opportunity to lower your cost basis if you do buy in. But hey, this is just my opinion. As always, do your own due diligence. Guys, hope you enjoyed this video. This was a fun one to make. October is probably going to be a very volatile month, so make sure you have your cash ready, make sure you're looking out for deals, and I wish you all the best with your investments. Either way, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.